What's going on, Deborah? I ain't gonna hold you long. Are you working? Or you just up? Um, man, my my allergies driving me crazy. Excuse me, hold on. Okay, what I want to share with you is something that I got from Casper a while back. It's a guy, I cannot remember the guy's name, but Casper shared something called quarters theory that he got from this guy, and I can't think of the
Dave.
Dave. Was it?
I think it's Dave or Day or something like that.
Okay, so I watched the video a while back, and I'm still trying to wrap my head around it for real, because it's like I'm trying to understand the concept totally, but I kind of I really understand the gist of it, the way Casper used it, right?
Okay.
And matter of fact, he spoke about it again in a video that he dropped the other day. Was that you that somebody told me about the video?
No, it won't be. But I
Might
might
have
have seen it.
might have been Rhonda, but somebody was like, "Hey, I just saw a good video. It'll be nice for the gang to look at it, right?" So I was like, "Oh, let me go check it out." So I checked it out. It was a good video, and he referenced it again. So anyway, with quarters theory, it's like you break the different kill zones down into quarters, right? And it's, I mean, you can go look at Dave's video. Let me see if I can find it real quick. Well, let me tell you how the gem I got from Casper, right? So the way I use it, right, is I just use the way Casper said. I look for my move in the second and the third quarter,
Okay.
right? Look for the, and this has been game changing for me. And the guy, he explains how to break everything. Like for the Asian, he do it from like the London. He do the Asian, the London, and the New York, right? I
Yeah, I
don't worry
think I
about the
wrote it
Asian.
down.
Yeah, and then so saying from 12 to 1:30, 1:30 to 3, 3:30 to why are my lines off? Why are my lines off? Oh, you know what? I think I did these on the 5 minutes. And so now it's putting it. Wait, let me see something. Yeah. Oh, I must have moved something. I had to move something because there you go. No, I don't know what happened. I don't know why these off. Let me fix these. Anyway, this gonna drive me crazy if I don't fix these. But you got it broke down. That's right. And then this should be 6. All right, so the way Casper broke it down, and this has been game changing for me. Help keep me focused. Help keep me calm. It's just called, I can't remember. I know he said it in his last video also, but he say it all the time. He always talk about quarters theory. He'd be like, but anyway, got it broke down into quarters. 12, 1:30, 3, 4:30, and 6 is for the London, right? And you do the same thing for the New York, break it down in quarters. I think it's like from 6 to what's the hour and a half? 7:30, 9 o'clock. Oh, wait a minute. 7:30, 9 o'clock, 10:30, 12. Right? Yeah. It's like every 90 minutes, right? So, but Casper say, look for your move in the second and the third quarter, right? So,
Mhm.
like how I got this sell side right here. This was the sell side I was watching. This was the Asian session sell side, right? So
Mhm.
when we came into the second quarter, right, we attacked um the low. We attacked the low in the second quarter, right? And
Right.
since we were dumping so hard, I said, man, let me go see what we going to, right? This ain't got nothing to do with this right here. So once I went back to a weekly and a daily chart. This top fib is a weekly. I can show you what it is. It ain't got nothing to do with what I'm talking about now, but I'm running my mouth now, so I can't stop. So this is consequent encroachment of this weekly order block right here, just the bodies, because we got these long wicks, and on the weeklies, when we got long wicks like that, I just focus on the bodies, right? Consequent
Mhm.
encroachment of that, and then the second one is consequent encroachment of a daily order block right in line with that. You know what I'm saying? So they ended up in the exact same spot. So I was like, okay, I'm going to watch that, right? Because we were dumping. And then as you see, we on this 255 candle, we came down and poked just below the weekly, right?
Mhm.
And
Mhm.
then we came down and touched the daily wick for wick. And then we got a breaking structure to the upside right there. And then that's when I went long over here, right? Because it's in the second and the third quarter. So it's like when when he told me that, well, and he told me when he said that in a video, right?
Mhm.
And I started like back testing it, like putting my lines on the different sessions like this right here, and just looking at what price did in the second and the third quarter. Game
Mhm.
changing. So, and the way you use it again is like have a higher time frame level of liquidity that you looking to attack, right?
Mhm.
And like this right here, this is I think it's like an hourly swing low, and it's a session low, right? So it ain't the, well, when I say hourly, it ain't so much the hourly time frame. It's like dailies, weeklies, session lows, session highs. You know how I don't know
Mhm.
if I ever spoke about it. Like initially, it goes in line with what I already do, where I look for the previous session low or high to
Mhm.
be engaged before I act.
Right.
It just adds another level of criteria looking for it in the second and the third quarter. And is, you know what I'm
Mhm.
saying, it's something that's been vetted by him. And so when I go back and I look at him like, hey, this works for real. You see what I'm saying? Is,
Yeah.
and I don't know where he got it from, but I'm glad he shared it. You know what I'm saying? So start back testing it. You know what I'm saying? Start back testing it yourself, and going back and putting the quarters, the quarters on the different sessions, the Londons and the New Yorks, and
Mhm.
look at how it play out and see if it, you know what I'm saying? Like for me, it, I used it in live today because I've been going back and, you know what I'm saying, looking at it, and I'm like, man, this is game changing. And when you said you was watching something that really didn't play out, that's why I was like, hey, pull up, I want to share this with you, because it's like it gives you it helps with trade selection. You know what I'm saying? It helps with trade selection, because it's like, you know, you looking for a specific time to engage a specific type of liquidity. And that's, you know what I'm saying,
Mhm.
that's the key to understanding like the order flow. That's the key to understanding the order flow. And like um initially my target was this high right here,
Mhm.
but I was like, I I ain't gonna be greedy. I'm just gonna get out at the prior day's low. Right. And in hindsight, it would have worked out. I've just been sitting up here watching some cow feet videos and watched it go to the take profit that I really wanted. But I just got out here at this imbalance because it was right at the prior day's low. And I know how wicked, you know what I'm saying, prior day lows can be sometimes, especially once we break below them this far, you know. So, and now look like we going back up here.
And you started your quarter at what time? You said 12 to 1:30?
Yes, it's 12. It's always midnight, and it's all New York times, right? So midnight, 1:30, 3 o'clock, 4:30, 6 o'clock, and then it'll be 7:30, cause 6. Yeah, it'll be 7:30, 9, 10:30, and 12. And then you keep going 1:30, 3 o'clock, 4:30, and then 6 o'clock. The last one is just, you know what I'm saying? It ain't. Oh yeah, it's a whole thing. It's 6 o'clock the next day, right? So it's like every 90 minutes from midnight and just go all the way through. It's like every 90 minutes. So it like if I turn all this other stuff off, and if I take these right here, just copy this over, come right here to, well, I really don't need that last one because I just needed the last 3. 12. All right, something keep getting weird. Something keep getting weird because when I moved it, that should have just moved in sequence.
Do you start on a what higher time frame do you start on? I see you on a 5-minute.
For my analysis,
Yes.
I start in the beginning of the week. I start at the, I started the monthly, the weekly, the daily,
Right. I'm
and
talking
then
about like when you're
once I like mark up my monthly, weekly, and daily, then I mark out hourly highs and lows. I mark out hourly highs and lows and see where that lines up with the session. So I'm always looking at hourly highs and lows. That's my time frame that I submit to, the hourly highs and lows for like liquidity. Because it's for like, in my experience, hourly highs and lows is like a good place to look for runs on liquidity. Right? They yield good moves. Some people like to do 15 minutes, but I like to do hourly highs and lows. Like if I put it on like hourly candle here, right, and turn my TDA back on. See right there, that low right there, that's the low that I was watching, you know what I'm saying, from like an hourly level. And then I got this hourly high right here marked out. That was marked out from before. Remember when I was like, I want price to come up and hit this low and then come down and take out those equal lows that we had on like the 15-minute. We fell like 2 points short of that, and then we went down and took out those equal lows and took out the daily low, right? And then so once we took out that daily low, and then we came over here and we set this hourly swing low, then that was my liquidity that I want to see us engage for the London. For the well, this is actually the Asian low, but I had that hourly low set so that I like, if I get up during the London, I want to see us engage this before I try to do anything. And then we start dying off past it so far. I was like, whoa, I need to see where we going. So since it was so far back, like I when I zoomed in like this right here, it's like the price start getting like real sketchy over here. Because it's the current contract. Like I used the front month. I used the front month, and so it don't have like all of the data, like the the continuous contract. It only goes so like with the days and the weeks, with the days and the weeks, it go back a little further, but like with the hour, like under days and weeks, it start getting like the price action start getting real sketchy. You know what I'm saying? That it ain't no good price action. So I was like, I don't like that. Let me go up to a weekly. And then so I went up to a weekly and then went up to a daily. And I was like, okay, I'm going to watch, you know what I'm saying? I'm like, this is a weekly, order block, daily order block. They lining up. That's confluence. I'm going to watch that area right there. Right. And I usually don't go that high for intraday trade. But since we didn't have any hourly, we didn't have any hourly or 4-hour information back there that I could rely on, then I see these things acting crazy. I think they moving around because I'm changing the time frame. Yeah, that's what it was. Cause on the time frame they just look funny. Like on the hourly they look funny because it do it for like the beginning of the candle. So yeah, that just start to play around with that. And use I like to use hourly liquidity. You know what I'm saying? I like to use hourly swing lows, right? That relate to a session or a day, right? Like if we hadn't taken this daily low, right? If we hadn't taken that daily low coming into this time frame, it would have been this. Let me see. Put this on the hourly. It would have been that, hourly swing low, right? But it's also a daily, right? And if we hadn't taken out this low right here, right, it would have been that hourly swing low, right? Because we got a swing low here, right? And then, but since we took it out and we made a swing low here, I was using that hourly swing low, and it lined up with last night Asian session. Yeah, so that's what I do. I look for.
So what do you get in on? A fair value gap or what?
I look for. I like to get on fair value gaps, but what I do, right? Let me go. I'm gonna go here and go down to a 1 minute chart, right? Go down to a 1 minute chart, right? So what I do, right? I like to engage fair value gaps, and what I do when we on a lower time frame like this, like the 1 minute. And I got other charts over here where I'll be watching 30 seconds and 15 seconds, right? What I do, I look for the absolute lowest imbalance in the price move, right? I look for the lowest imbalance in the price move if we've hit like a real high time frame PD array, and we have a reaction this big, right? This right here, right? I watch how price start coming down, and if prices like if prices giving me a bearish look on the lower time frame like this right here, I try to get the lowest imbalance I can in the move, right? And now I'll be the first to admit, sometimes I get left because that very bottom one be a breakaway gap. But what really make me go toward the, like this one right here, this is something that, like, what really make me like trust that it's going to come back to this is because we came so far into it. We came like almost 3/4 into, you know what I'm saying? Like, this is the initial. We came in it there. We came in it there. You know what I'm saying? So I'm like, okay, we done came so far into this. We gonna go feel that. You know what I'm saying? But if we had never come back to this, if we had never come back to this fair value gap right here, then I would have been looking at something over here, right? Some kind of like this volume imbalance or something over here at this order block right here. Okay. Right. And the reason why, because we got this big order block right there, right? And then this one traded back into it. So we got an order block, an order block, an order block. They like stacked up. This is the initial order block of the move right here, because we came down to the area of support and then went past the change in the state of delivery right there. Right. And then we set another one and another one. Right. But if we had never come back to this imbalance right here, then I would have been looking for an imbalance at this order block there, because it's like two order blocks that touch this one. But since we had come all the way down and left that little bitty piece, right? From my experience, the algo gonna go back and get that little piece, especially when it's like here is it engineered liquidity there, right? And it then gave you a look like, okay, we going down, right? But this is on the 1 minute. The higher time frame is bullish, right? So I'm like, okay, this right here is the 52 fake out. It's just coming back down to reprice all of this right here before taking off. It want to make sure it get it efficient so it can do this. You see what I'm saying? And you see, once it got all of this efficient and it took off, right? It consolidated again right here at that prior day's low, right? But then it quickly just dropped down and went again. You know what I'm saying? Matter of fact, it hit a quick little Judy swing right here. It went to boop boop and then took off, right? because it went up, took out the high, and then came back down. Where if it go up and take out the high, right, it should stop at that imbalance right there. But it slid past, and once you break that low right there, and the price is bullish, you already know, boom, Judy swing. You know what I'm saying? Boop boop, Judy swing. Right, fooled people that it was breaking down, right, and then go up. You see what I'm saying? But yeah, I went running my mouth like crazy. But yeah, try that out. Try that out. For real. Try that out. Break it down into the quarters like that, and just prior session or prior day, whichever one we haven't taken. Prior session, prior day, right? Like I say, if we hadn't taken the prior day's low, that would have been the one I'm watching. If we hadn't taken this hourly low right here, that would have been the one I'm watching, because that's Asian, that's early Asian, and this is late Asian. You know what I'm saying? This is the Asian low, right? This is like, if we wouldn't have took this out, this would have been the Asian low. But this is the Asian low, and it's an hourly swing. I just look for the hourly swings in those sessions, you know. But when I look for the hourly swing, right? But I typically watch it on either a 15-minute or a 5-minute, depending on how price moving. So, cause the 5-minute, if I'm looking for hourly swings, I watch it on the 5-minute, and when it starts setting up, then I go down to the 1 minute to see if I can get a better entry. You know what I'm saying? Because on the 5-minute, this right here would have been the imbalance right there, the entry imbalance right here, right? But on the 1 minute, I had an imbalance all the way down here that I could get long off of. Either way it go, the trade worked out. You see what I'm saying? Because the stop loss is down here, but this just helps with the risk to reward. You know what I'm saying? This helps with the risk to reward.
Yes. Do you find you've been finding your trades in the third quarter?
They it play out between here.
Yes.
Like, you know what I'm saying? It
Okay.
like a lot of times it'll set up in the second and play out in the third, but it
Mhm.
it varies. You know what I'm saying? Like sometimes it start to play out here and then it'll play out and set up here. You see what I'm saying? So it's like it ain't hard and
Mhm.
fast, but it's just I look in between these lines right here. This second line and this fourth line, right? That's I look at
Mhm.
this area right here for the setup. And it like I'm a visual person, so it helped me to see, okay, just like marking out the silver bullet time frame. You know what I'm saying? Like, okay,
Mhm.
it helped you to see the price inside that little window. Well, help me to see the
Mhm.
price in that window. And then I could see, okay, we got a break in market structure right there. We came back up to this imbalance. This the imbalance you don't want to get fooled by, because we just took out liquidity and we got a break in market structure to the upside on this same time frame. Right. So this one right
And
here,
you know that's the one I got food by.
this one right here. Oh man. And we talk about that all the time, Deborah. We talk
Yeah,
about that
yeah,
all the time.
yeah.
Once we, you know what I'm saying, once you take liquidity, you know what I'm saying,
Uh-huh.
once you take liquidity like this right here, and then you get a break in market structure right there, it's
Uh-huh.
like you don't want to get fooled by this one here. But I ain't gonna hold you. This could have been a nice little scalp. You could have scalped out of it. That's a nice move. That's like a 10-point move. What's that? 45, and it came all the way. Yeah, that you could have got 10 points out of that. And not if you shooting for that low, you ain't gonna get it, but you could have got 10 points out of that.
Oh, I was shooting for 5.
Oh, so you wouldn't have got stopped out on this.
Oh.
Yeah, you wouldn't have got stopped out on that if you, let me see. If you enter on first touch, that's all the heat you took right there. Yeah, a point and a half. Like, no, like a point. It was a point of heat. And then you could have got 5 out of that.
Mhm.
Yeah, you could have got 5 out of that. I wouldn't have took it, but you could have got 5 out of that. And the reason why I say I wouldn't have took it is because we had come to we
And I
just
won't even think about that. And I knew we had melted down so far, but
yeah.
I don't know.
Oh,
I need to
and
pay attention to it.
another thing too. This is what I no matter like me, no matter what the bias is, when it comes to the midnight, when it comes to like the midnight open, if we sail down, if we're above midnight, right?
Mhm.
I'm typically looking for sales if I'm trying to scalp. You know what I'm saying? I don't
Mhm.
care what the bias is. If we're above midnight, I'm looking for sales. If we below midnight, I'm looking for buys. You know what I'm saying? And
Mhm.
especially if we get
Mhm.
extended below midnight, right? If we get extended below midnight, I'm definitely looking for buys. Even if I don't have a bias, that's just like, you know what I'm saying, you know how they say my hip pocket training, like, you know what I'm saying, quick little back of the envelope way of saying, okay, am I gonna look for a long or a short, right? If I'm below mid, and this is like during the London, right?
Mhm.
If I'm below midnight, just say how we started over here, like we started over here trading whatever the time we started, right? And then we open at midnight here, right? So we
Mhm.
come down below midnight, right? And then
You
we
looking
push
for
back up
buys.
above, we push back above midnight, then we come back down below midnight and went forever, right?
Mhm.
So
Mhm.
the sell side that's being attacked is below midnight, right? So when we
Mhm.
take that sell side and we get a break in market structure up, that lends into my theory of we below midnight, we in a deep discount, right? I'm not looking for a reason to sell, because even if I was bearish, right, I wouldn't be, well, I guess if you was like looking at the range from here, right, from here to there, right, that could be a reason to sell. But if you look at like the move, right, I wouldn't be looking to sell right here, because it's still in a discount. It's getting close, but it's still in a discount. You see what I'm saying? So like, and I don't like selling at equilibrium, right? I don't like selling at equilibrium because it can go either way, right? But I like to sell in the premium. I want to be in the premium when I sell. And so that's another reason why I wouldn't even try to short off of that, right? But like I say, it would have worked out as a quick scalp. But I just have different little things that I put into place to like kind of help me along the way to make decisions of what I'm trying to do as far as buying or selling, right? Selling a premium, buying a discount, right? If
Go
we
to the 15-minute time frame and see. I had put the PDub on the swing high at what time is it? It's at 00:45, the swing high.
yeah, this right
I
here.
put it there. And then I had put it right there at the, I think it was 2:15.
Say 215.
Yeah,
Right here.
right there.
Okay, but we went
I
farther
was
than
all
that.
wrong.
Yeah,
Huh?
we went farther than that. So it would have you
So I should have put it on over there.
yeah, out to the lowest low. You always want to go to the lowest low. Like at this time at 215, that was fine, but we kept selling down. You know what I'm saying? So it would have come to that candle, like it would have stayed there, then it would have stayed there. When that one made it would have got moved there. And then when that one got made, it would have got moved there. You know what I'm saying? Then it just stayed there. And then now that we've come back and broke through there, now we've made a new range. And this is the range we're looking at now, right? Because we made a new range. We took out that high. Now we made a new dealing range there, right? We've had a break in market structure to the upside bullishly. And we already tested this imbalance right here, right? So since we barely went into that, right, I would like to see that act as a breakaway gap and we don't come back to do anything with that, because we sold off. I mean, we bounced off the top 25% right there. We bounced off the top 25%. So since we did that, I wouldn't want to see price come back down to reprice that right there, right? If the bullishness is to like keep up, right? Now, if we get all the way up here and take out this high, all bets are off, because we've come to the apex of the parent move, right?
Okay.
We've come to the apex of the parent move, and the market maker buy model is over, right? The buy model is done, right? Because you're looking at, you got your initial consolidation, whatever he called is accumulation, something. Then you got your smart money reversal down here, and then it just took off. You don't even have, oh no, right here, this is, you got a low short or whatever you call it, and then on the other side you may get like the reaccumulation and distribution. But like at this point right here, with the market maker buy model, you don't want to see it drop back down. This right here is the original silver bullet. This was the original silver bullet, where when we get to this point of the market maker buy model, right, these opposing what's the names here? You got this breaker, you got these you got like the order blocks on opposing sides, and this area right here, this right here is like the strongest piece of the move, and he used to call this the silver bullet. When you get long on this piece of the move with the market maker buy model, and because this was like the strongest part to, because like it's at the end of the move, and they definitely don't want to let nobody get out of their positions. They don't want nobody to mitigate nothing at this breaker right here, so price expands up quick. And that was the original silver bullet he used to talk about. Now he done changed the silver bullet to a certain time frame, but the silver bullet used to be buying or selling off that last leg of the market maker buy and the market maker sell model. But yeah, that's that with the quarters theory. And always even watching the 15-minute, always try not to engage until we take out liquidity, and then we get the expansion. Right? Try not to engage until we take, and you want to always look for prior session or prior day. Like if we already took out prior day, be looking for prior session, right? Inside your kill zone, right? Even if you don't use like the quarters theory, it just helped me zero in on the second and third quarter. But like wait till it engage, and once it engage, wait for the expansion, right? And that's why, like, the reason why I don't know if I ever I don't know if you remember me saying it, right? But I learned that from Casper too. I always look 2 time frames down, right? And so since I'm watching hourly lows and highs that I'm waiting to be engaged, once we engage them, you know what I'm saying, I watch it on the 5-minute, right? I watch it on the 5 minutes, because once we take this out, once we took this hourly low, right, and then I got the expansion on the 5-minute, right? We got the displacement, right? Making this order block, because we got, you know what I'm saying, large displacement with imbalances, right? You always want to look for the imbalance on the displacement. If it just stair-step up, you know what I'm saying, it can be used, but I don't trust it when it stair-step up. I want to see the displacement with the imbalances. And also, you see how we disrespecting this imbalance over here while we creating this, and then we got the breaking market structure, right? This is happening 2 time frames down. You see what I'm saying? This is giving me my entry, right? Where like if I'm still looking at it on the hourly, right? If I'm still looking at it on the hourly, I don't have an entry per se. You see what I'm saying? Because like it's engaging the hourly liquidity, but I don't have an entry on the hourly yet. Like my hourly entry may be this fair. If this turns out to be a fair value gap sometime during the day, once price decides it wants to pull back into this, it may be a nice spot to get long just below midnight right here when it fills in this imbalance. You see what I'm saying? So, and that's on the hourly time frame. But with the hourly time frame, look how much look how much risk I got to use right there, right? But I watch it 2 time frames down. And if you notice, right, when ICT be talking about his son's model, right? When ICT be talking about his son's model, he say whenever it engaged the liquidity, just say if it engaged this hourly liquidity here, and let's just say you're watching it, let's say you're watching it on the 5-minute, right? Right. So his son's model is, once you get an up close candle, like, excuse me, above the liquidity right there, that you watching, once you get that up close candle above that liquidity right there, drop down to the 30-second, right? And if you think about it, the 30-second is 2 time frames down from the 5, because you go from the 5 to the 1 to the 30. You know what I'm saying? And so it just kind of it kind of like gave me like more confidence in that there, even though I got that 2 time frame down from Casper, right? Because he be talking about if you watch the 15-minute, right, for your liquidity, you want to be making your entries on the 1 minute. If you watch the 4 hour, you want to be making your entries on the 15-minute. You know what I'm saying? It's like, and I'm like, it's two time frames down. I talked about that one time before on one of the lives. So yeah, so that's why I watch it on the 5-minute, because I'm looking for hourly swing lows to be engaged, but it's key swing lows, not just any hourly swing low. It's a session, it's a day. You know what I'm saying? It's like it's got some kind of significance to it. Like it ain't just any hourly swing low, like this swing low right here or this swing low right there. Nah, it's like a session low, a daily low, a session high, a daily high. You know what I'm saying? And that's how I try to get like my my most probable setups like that right there.
And that's a good entry too that you got.
Was amazing. It was an amazing entry. Matter of fact, I passed another evaluation with that trade this morning. I traded in all my accounts, my personal account, my PA accounts, my evaluation accounts. I passed another evaluation with that trade this morning. Wow. Yeah, I was on day 8. Yes, day 8. Wow. Yesterday, I traded yesterday, and that was day 7. But I was still short, I think $250. So all I needed was like one mini for 5 points, or micros for $1 million. And so it worked out good. So I was able to pass it. And then, you know, like I said, I didn't want to be greedy, so I got out here. I was going to shoot for the high, because that was
blame y'all would have got out there too.
Yeah, I just got out there.
Tied up. Yes, right.
Mental capital. Preserve mental capital. Like it's the worst thing in the world is to get greedy and then give back a whole bunch of profit. Right? Right? Because it's like, especially when price make a move like this right here, right? It's like, personally, if price make a move like this right here, I don't feel safe moving my stop from there to anywhere but here. That's the only place I feel safe moving my stop to. I don't even feel safe moving my stop here, right? Because we got this imbalance that come all the way down there, right? So with a move like this right here, I was like, when I said, yeah, I'm gonna just get out here, because we start retracing all the way back down here, and we mess, man. And it mess around to be a 52 fake out, and it just go short from it. Man, look at here. No, sir. I probably would have broke my computer. Anyway, I ain't mean to hold you for a whole 45 minutes.
Good learning. For me.
Yeah. Got people gonna be popping up like, man, what did I miss in the voice? What did I miss in the voice?
A whole lot. Good. Man, well, I appreciate it.
Ain't no problem.